95% interest-only loans for investment properties.
Yeah,
do they exist?
They do exist from those days.
G'day, my name is John and I'm the principal of Hunterwood Solutions. My team and I over the last 15 years have been helping first homeowners just like you. And these booklets you're about to receive over the next week or so and videos are really designed to help empower you with knowledge so that you can get started on your first homeowner journey. Now, if you're anything like the first homeowners we've helped in the last 15 years, you're both daunted and excited about the prospect of buying your first property. And you don't have to be daunted. By all means, you'll still be nervous. But by taking your time and surrounding yourself with the right people, you'll find that your anxiety levels will drop and it can be actually a very enjoyable process. So each video is going to have a testimonial from a particular first homeowner where they will go through things with you that, with the benefit of hindsight, they would have done better, or any pearls of wisdom because they've already gone through it. There is a 5-part video. Yes, there is 5, not 4. There's going to be a bonus one at the end there, learning how to become a rent investor for $20 a week. But each booklet is designed, and each video is designed to help you get on this journey. So this particular booklet that you've received is going to be about planning your journey and how to get started, okay? Now, what I'll be going through in the video itself today is you won't find in the booklet, so please pay attention. There's 4 topics that I'm going to be covering in this particular video that is not in the book. So let's get started. Now, the first topic is what questions to be asking a mortgage broker. Now, a mortgage broker represents you in the lending process. They typically have 25 lenders on the panel, and they don't charge you anything because they get paid by the lender. So they'll help you understand what your borrowing capacity is. They'll help you understand the costs and all the features of the loan. So the sorts of questions you might want to ask your mortgage broker is, 1, how much experience have you had? And the reason why you might want to ask that question is you might be leaning towards buying a block of land and building as your first home. And there are mortgage brokers that are very good in that house and land package home loan space. There are other mortgage brokers that are very good in the off-the-plan space. So you may be wanting to buy a brand new unit. And then finally, there are other mortgage brokers who are very good in that rent investing space where you decide to rent in a suburb that you really, really want to live in but can't quite afford right now, and decide to invest in another location with capital growth prospects. Okay, so find out what experience they have. And then other questions can be related to how they get remunerated. So mortgage brokers get paid between 0.6 and 0.75% of the loan amount. And are they steering all of their clients towards the lenders that pay them the most? So just find out that particular question. Now, the second topic that I wanted to touch on is, what if you had no deposit and how do you get started? So that's a really good question. I covered that in the booklet. So there are 4 ways to get around that. The most common way we're seeing nowadays is where you team up with mum and dad. That is, mum and dad provides equity in their own property as a source of collateral for you to move forward and use your income to help buy the property. So it's called a family guarantee, and normally it lasts for 3 years. And in that 3-year period, what you've done is hopefully you paid down the loan or it's gone up in value. At that moment in time, there's enough equity in your own property for you to release mum and dad and say, thanks, I'm up and running. And the second part is joint ownership, where you buy a property with another person and you bring your own strengths and weaknesses. Now, the third topic is what costs to expect as a landlord or as an owner. Now, it's not only just the savings and the costs to get into the property, but what happens when you buy the property and you become the owner. So please take into account maintenance costs. So, in the past, a broken pipe would have been paid for by the landlord. Now, you'll need to come up with that $2,000 to $5,000. There's also strata levies. If you buy into a townhouse or a unit, everyone puts money into a pot to make sure the gardens are kept clean and the building is kept beautiful. There's utility bills, so electricity and water and things like that. insurances as well. Now, in insurances, I include income protection insurance. If you get sick and can't make your repayments, how are you going to repay the loan? So please make sure that you've got income protection insurance. And then finally, there's all these other things, council rates notices, and so forth. So talk to your accountant or financial planner or mortgage broker about those incidental costs that do add up. And then the fourth one, and the fourth topic is how to get started. Now, typically, the way to get started is to get what's called a pre-approval with a lender. A pre-approval doesn't cost you anything, but what it does do is it gives you the confidence of knowing that you can buy that $500,000 house, and you've got 3 to 6 months to buy that house, depending on the lender. Now, when you submit your documents to your mortgage broker, the lender is going to be looking at the 5 C's of lending, and I'll go through those very quickly. The first one is character. What sort of person are you? Have you shown a history of repaying debts back? Are you a young doctor coming through the ranks? So character is a very important part of the process and can often be the decision between a decline or an approval. The second one is collateral. And collateral refers to what are you bringing to the table. So you're bringing cash, your own genuine savings, or you're using mum and dad's equity, or a combination of both. Okay. The third one is capacity to repay. Capacity is really just saying, I can afford this property, and even if interest rates do go up, I'm still okay, I'm not living on baked beans and water. The fourth one is capital, and it's similar to collateral, where you're just saying to the bank, I'm offering these sorts of things to de-risk the loan to me. So equity or cash again. And then finally, the fifth one is conditions. So are you buying off the plan? Are you buying house and land? Are you buying a rundown property? Are you an IT contractor and you're not actually employed, but you're self-employed under a contract environment? So there are conditions to the loan that may be unacceptable to a bank. And that's the role of the mortgage broker to find the lenders that do have an appetite for your particular scenario. So I hope that helps. That brings to an end this particular part of the first video and the booklet. So let's hear now from Amy. I had the pleasure of working with Amy, and she will be going through her journey and all those pearls of wisdom that she wished she had with the benefit of hindsight. Thank you, and I look forward to the second video. Bye for now. So welcome, Amy. Introduce yourself. And
So my name's Amy. I'm 27 and I'm an early childhood teacher.
So, Amy, is there any tip that you can offer any aspiring first homeowners?
Yeah, I guess navigating all the terms. Initially, that's really overwhelming. So just getting an understanding of, what interest-only loans are, lender's mortgage insurance, all those terms that, initially are very foreign. Yeah. Getting an understanding would be beneficial.
Mate. So, Amy, what was the biggest learning curve in the whole journey of buying your first property?
For me, I think it was gaining an understanding of all the terms and the process involved of a home loan and applying for a home loan.
It's really baffling. Yeah.
It can be. It's very overwhelming initially. So, it would definitely help to have that understanding and have someone to guide you through that. Definitely.
So the terminology, and what about? Is there anything else that when you think back on reflection?
Just knowing the options that are available to you too.
So let's think about your next purchase, Amy. Is there anything that you could be doing differently with the benefit of hindsight to plan for that next purchase? What would you say?
So definitely take your time. As I said, we definitely rushed into our first purchase. But I think in future we'll definitely take our time. We'll shop around. We'll make sure that we definitely revisit, go and see yourself in Hunterwood and gain some more knowledge, I guess. Before.
And I hear before you were mentioning the media and friends buying property.
Yeah.
Just is it true if I say that blocking some of that out and
definitely
stay true to your course?
Definitely, yeah. And I think once you've done it once, you sort of learn what not to do.
Yeah.
And you just cover all bases, I guess, to making sure that, everything's in place before you go making another big decision.
Yeah. So what advice would you give first homeowners around organising a pre-approval for finance?
So I guess going back to what I said before about getting an understanding of the terminology, I think that's important. And then definitely don't do what we did and make an offer in place before you have that pre-approval, because it creates a lot of stress.
Yeah.
Not only on yourselves, but for everyone involved in that process.